Hi all, I'm Sham and I have Kishan with me.
Hi, Sham.
Welcome to Free Float. Today we'll be discussing everybody's favorite topic du jour, ESG investing. And just to keep things interesting, I'll take whatever position I'll take the opposite of whatever position Kishan is going to take,
Right.
just to be the devil's advocate. So, Kishan, take it away.
Yeah. So, Sham, I think, in the last few years, uh, ESG, which is, environmental, social, and governance, team investing, has, been gaining popularity, especially in the West. And if that happens, it's just a matter of time before it catches up, even in like India, right? And I'm not sure, but have you had clients who have come to you, I mean, asking you for you know ESG investing,
Nah,
whether
all they say
you know
is, dude, make me money. That's it.
right. So yeah, I mean the same. I think even for me the same has been the case that that I think it's been a few. Uh, I think it'll take a few years, for us to uh, gain traction. And for this investment team to gain major traction. But I do think if more than more than the popular, I mean, more than people demanding it, what I see happening is that fund flows, will be directed towards, I mean, like ESG, stocks, which rank high, just because it's a major trend, and the trend demand, is can be such a big gravitational force where companies that rank higher will like end up getting major, I mean, much higher multiples than the ones which rank lower. Also, more from a larger perspective, with countries like Japan and UK banning like gasoline like cars from 2030 onwards, um, it puts a very big risk to major. I mean, to your stock portfolio, say because all companies discount earnings, on perpetuity basis. And if you start having a very limited window for many stocks of say 10, 15, 20 years, then your portfolio performance will will greatly vary if you are holding stocks which have where the where the outlook for these companies having the same earnings might not be there 20 years hence. So from that perspective, I think it's whether whether, I mean, like I've made a browse on how the universe is picked. For example, I saw a tweet by someone a couple of days ago that ITC has AA ESG rating, and I was like, what, that can't be true. And then I googled it, and then it was, I mean, it's true. I mean, I still don't understand how, I mean, or when it's relative to other tobacco stock, but that makes no sense. I mean, you can't do, no amount of greenwashing can change the fact that ITC sells cigarettes which kills people. No amount, nothing can change that fact. You can, and so I find it very strange, that I mean, the universe is extremely subject to that. I can invest in IT companies just because they don't pollute the environment, or at least as much as a chemical company. But an IT company can have terrible HR policies, you know, Um and there's no way for an individual investor to actually find out whether whether a company has treats its employees fairly, in a very ethical manner, and treats it in a with a high standard. I mean, so if you start doing all of that, then the number of companies that you can actually invest in will be probably like five companies at the end. Yeah. So I mean, there's a lot of question mark and like limitation about what the universe of like ESG investing should be. But I think more from a broader perspective, trend for me it's become like one more factor. Like you have value, you have momentum. ESG is also a factor that I think will can be attributed to like stock returns, like in the future, especially. So, so what do you think?
Well, I think ESG is a short-term threat to most deep value stocks. So, if you look at most of the so-called old economy stocks, right, from mining, energy sector, you mentioned tobacco, then there is defense, right? So those things, I don't know where you draw the line between morally ethical versus, you know, checkbox ethical, right? Um, so does it mean that if you are an AI company selling facial recognition software to the Chinese government, right? Where do you rank yourself on ESG?
Right, and especially, I mean, yeah, I mean, you perhaps zero environmental impact on. Your carbon footprint might be zero,
Yeah,
and the governance standards of company might be very high, but the social impact of your product might be, you might treat your employees the best way, but at the end of the day, your product ends up, facilitating. Uh, like a state which will try to suppress its
right.
people. So then where you draw the line?
Yeah, so in a way, this thing is a farce, the way it is being implemented right now. I don't think you can reduce it to a bunch of easily digestible scores and say, here's an ETF that scores high on ESG. Now go feel good about yourself. I don't think, that's the way. I don't think it was intended to be like that either, but that's the way it has been
Yeah,
implemented, at least in this version of the world. Um, but
right.
I,
Yeah,
yeah,
and also I think if you just see the universe of companies in India which rank highly on ESG, Reliance Industry and BPCL are number one and number two in the Sensex 100 ESG universe. I'm like, come on, that cannot be. They will fail the environmental rank, very clearly. But it's a fast, like you said, that
yeah.
the universe is so fast.
Yeah. So, but that's the implementation of things, and I think it bears watching how it evolves because, like they say, the first version of most things is crap. So, the first version of ESG implementation is farcical, but it's something that you should be worried about if you're a deep value investor, at least for now, because
Yeah,
what might happen is, your value stocks might get more deeper in value because of these nonsensical ESG scores that people are,
yeah,
slapping on different things. But at the same time, this does, I feel, eventually, if they get to the right way of, implementing this, it might lead to some good. I'm not saying it will solve all of world's problems, but there's, if you dial back the notion of shareholder supremacy, right? That everything, should be done to maximize shareholder value. That whole thing, is a fairly recent construct, right? It wasn't meant to be so binary. Companies were indeed responsible for their employees and the environment and the towns in which they operated. So there was a time, before this whole maximize shareholder value paradigm, where companies were responsible for a whole host of things. It was only recently, after the Reagan era in the US and the Thatcher reforms that, things became very binary. And in a way, this is sort of dialing back things and saying, hey, you know what? Not everything not everything can be priced. There is always, something, that you do where you have an impact on that cannot be fully priced into your, in the cost of goods and the cost of raw materials for you. So this is a way of, trying to price out those things.
Yeah. Also, I think I think the problem or the mistake that I'm making, or that most people make is we look at ESG as a like a score, uh, which where in our mind uh, we think it should be only companies that should be which are engaged in, say, renewable energy, and companies that you're trying to uh, tackle like worlds. The problem, let's say, Beyond Meat, which is which is like artificial meat, or something that is trying to change the world. At least in in the motto of the company. Um while what ESG is trying to do is that rank companies which are already existing in, say, in the old economy, or in say the existing setup, and trying to judge them by how they operate on in certain metrics, that it's not trying to change the world in the sense that it's not trying to say it's not meant it's not meant for a newer conscious kind of capitalism. It just accepts that the world is the way it is, and that changes like a slow thing, and you cannot remove or ignore a large part of of the economy by saying that these companies we won't invest in stuff, but that the fact is that they do add value, they do create jobs, they do add like a positive impact on the economy at least. So you're trying to judge companies by certain metrics by accepting the way they are, and trying to tell them that maybe you should trying to improve. Maybe you're a mining company and you have a negative impact on the environment, but there's a way for you to balance your activity by doing some good in some other way. I think that is what ESG is trying to do.
Right.
Yeah,
So in a
which
way,
is
they're
which
trying
comes
to
back.
price out the externalities, right?
Exactly.
Yeah. So this is tricky because capitalism is very bad at pricing externalities.
Right.
So the thing is, there's all once you start measuring things like this and assigning scores, companies will try to game it. It's fairly straightforward, and especially when it starts impacting their bottom line. So there's already, I read some article on Bloomberg which said that ESG mandated bond funds, right, are already pushing up cost of funding for a whole bunch of industries. And most of these old economy stocks, old economy companies are heavily levered, and they depend on the bond market for most of their funding needs. Now, if their cost of funding goes up, it means their whole capital structure needs to be either delevered, and that means that for some period of time shareholder returns are going to be compressed drastically in those companies. So when this happens, the management is incentivized to figure out ways to boost their ESG scores,
Right.
in the very short term, and that will lead to a lot of greenwashing, right? And it's hard to say where it will evolve, because there was a time when coal power in the US, right?
Yeah.
When you burn coal, you release sulfur, So, they said that, look, you're poisoning the environment. There's like this, so-called acid rain is a possibility. So you should install scrubbers and raise the length of your smokestack, right?
Yeah.
So they did that. So a lot of companies drag their foot, kicking and screaming, but they install scrubbers and they raise the smokestacks. And guess what? Coal burnt in places like Georgia and all that, because they raised the smokestacks. The impact was started getting felt in Canada,
Right.
because
Because
they were pumping so much carbon, right, into
yeah.
the upper atmosphere, that it went all the way back to Canada. So the Canadians were like, hey, what the hell, right? So so you solved your problem, right? So your surrounding areas are now clean, because you
Yeah.
installed scrubbers, and you removed sulfur and you raised the smokestack. So your surrounding area is fine now. But what about Canada? And this is like thousands of miles away, right? So it is impossible to sort of price out all externalities, and this is always going to be a problem. And that's precisely one of my biggest fears, which is this ESG thing is a moving target,
Yeah.
right? No company will ever be, you know, ESG friendly.
Yeah.
So it's impossible, and they will always find ways to rig it, and they'll always find ways to circumvent it. So we've just created another, game, for companies to sort of exploit. But I feel there will be some good that will come of it. But the way it is being implemented right now is totally bogus.
Yeah. Have you seen the NSE out at or the Sensex? The index. The ESG index.
No, no, I haven't. No.
It's quite a interesting index. Just have a look. The question to me is, would I invest in that index only? From an investor standpoint, because I believe that if this trend emerges, like even stronger, these companies will like end up outperforming the other companies which rank lower. And should I just invest in these companies, or have a universe of of companies that rank highly, you know? And I'm not sure about that answer because uh, um, as an investor, I think because it's a fast, it might not take off as well as we believe it might. It would.
Yeah, so see, look, you're kind of wading into the momentum versus value debate, right?
Yes.
I do believe that ESG has momentum. So there'll be more and more mandates, for ESG funds, and I think fund flow is going to, at least new fund flows will be ESG specific. And there are a lot of investors who will try and slap on this socially conscious investing angle, because the earlier rounds of investing in emerging markets went into questionable businesses, mining and uh, yeah, mostly mining and natural resource extraction companies. So instead of explicitly forbidding those sort of companies, energy companies and resource extraction companies, they're just saying invest in ESG friendly companies. So it's a way of bypassing some of those, and I think flows will only increase to ESG friendly funds. So it's a good bet to sort of go with the flow. And but at the same time, it is too early to pick value buys in non ESG sectors. I think I think the non-ESG pool will consolidate at some point. So you mentioned, electric only cars in UK and Japan. So what this forces the industry to do is realign, right? All your OEMs and everything will now have to realign towards electric cars, which uses lesser parts. There's lesser maintenance overheads and so on and so forth. So a lot of auto OEMs, to use your example, will have to consolidate. So it is premature to sort of bet on that sector because we don't know how that consolidation will play out. But once that consolidation is done and you're down to two or three players in each sector, then the pricing power of those guys will go up, right? So that's when you start, going after deep value buys in that place. So I forgot this book. I think it was called Deep Value. So over there, the biggest, example that stuck in my mind was, investing in companies that produce the lead additive that goes into gasoline after leaded gasoline was banned,
Yeah.
right? So initially there were like, it's a fairly easy additive to manufacture. So there were dozens of companies manufacturing it and supplying it to refineries. But as the leaded gasoline was banned and rolled back, over a period of time, that leaded gasoline additive companies consolidated, and other chemical companies that were producing it spun that piece out, and threw it out of their of their mix. So in the end, there were only like three companies producing this additive, right? And this investor went and bought all three of them, right? And they were enjoying margins of 60% and higher because, if you were a refinery producing leaded gasoline, you had to buy from those three people.
Right.
So yes, over a period of time, leaded gasoline went away. Things became great again. But during that transition period, there was a deep value investment to be made, and and a similar thing can play out in all these so-called dying industries. Including internal combustion engines and so on and so forth. So, but it's still premature. So now is the time to sort of do your homework and understand how the industry is set up, who are the players, competition and so on and so forth, so that you'll know when to pull the trigger on these kind of things. Because if you get the timing right, there's a ton of money to be made.
Yeah. I mean, I think, for me, the question has always been, do you just look at ESG companies, I mean, as a universe, because, to predict, how the consolidation will play out, and, how, things will evolve, that's very hard to predict, right? I mean, especially if you believe in systematic, and like investing, that's not for you to, for you to go, and explore. Rather, should you just, have a pick of, say, the top 50, the top 50% of companies that, rank highly on like ESG. That would be my universe, and then I'll, run momentum or value, or, quality based on that universe. So that,
Right.
becomes, so I just do it. I mean ESG investing, but I also, apply other factors on it.
Yeah, I think that makes sense. I think buying stocks ranked very low on ESG, especially if you have like a 3+ year time horizon, is kind of risky at this point. So I would definitely have ESG as the first ESG score as a first ranking filter, and eliminate the bottom maybe 10%. I don't think it's wise to consider that. That particular population at all.
Right. So where do you get the data from? Because, I've looked at data from from many sources. It's extremely hard to find this data.
Right.
I mean, I called up, I think, one company that provides data to like Avendus or something, and I wanted, those scores for our universe, and the quote I got was 10 lakhs for a year. Yeah,
Ridiculous.
I mean, so then, I mean, the question is, how do you get a data even?
Right, right. Tricky. So I mean, we'll have to see where this whole thing goes. So
Yeah.
yeah. So with that, let's wrap up this week's free float discussion. I hope our viewers learned something new, some new takeaway from our face to face. If you have any questions, drop us a note in the comment section of the post. We will catch you again next week. Bye.
Yeah.